here in this video is the ability for us to analyze our data more efficiently by drilling down across dimensions in a standard flow of information that helps us be able to answer the questions that we're trying to get, which is what makes up this number. So let's take a look. So what we have here is a standard report that we're going to take a look at. This is going to be an NCF report based off of time. So we have our 4 quarters and our total at the end of the year based on our NCF roll forward categories off to the left. Now, before we dive into the actual report, let me show you some of the options of the drill down paths that we can take a look at. The first path that is most common to most of us is we have an NCF roll forward, what producers make up a certain category, and then what clients make up that. So it's going down to this normal drill down path. There's some other drill down paths that we can look at as well. We can skip the producers and just say, give me all the clients that make up a certain category. There's two also categories, drill through categories that we're going to take a look at. One, which is the ability to drill down also using the entity dimension. That allows us to be able to move from a regional view and say we run it for a certain region and we want to drill down and see what opcos make up that certain number. You can use that as well. So if you're a regional CFO or you're from corporate, this might be very handy, and we'll come back and look at an example here in a minute. So let's dive in. Let's look at Q2, and we're going to drill down into that. So here we have our results for Q2. And we're going to take a look at our timing bucket, which has 85 grand in it for June 2012. So we want to understand what makes up that number. So what we're going to do is we're going to double click on our timing button. And in double clicking, what you're going to notice is it's going to change your sales account or your sales flow account, which from total sales, which is this total sales flow, to the timing bucket. Similar to what happened when we drilled down on time, where time went from Q2 2012 total to Q2. So now you can see that we have our listing back of producers. So we can see that one number drives pretty much the entire 85, which is this 100,000 in Michael Kerr's book. So let's find out what makes up the 100,000. So we're going to go ahead and double click there, and it's going to drill down based on that, changing our action pane. Keep in mind that as you drill down, the average drill time is around 10 seconds, except for when you get to clients. Clients take a little bit longer because we have so many in our BPC dimension that it takes a little bit longer to analyze. Now with our results returned, we can analyze and see what made up that 100,000. So you can see that it all was in one client called United Dairy Farmers. So you can see with just a couple clicks of our button, we were able to answer what made up this number, moving from our NCF roll forward all the way down to producer and to client to be able to explain and understand what makes up our number. Now that you've been able to drill all the way down, one of the questions is how do you get back to the way that you wanted to see, or if you wanted to move back and forth. You'll notice a little area right in here that says go back. This is a natural built-in feature of BPC, so if you just click on this one, it's going to take us back from all the clients back to the same where we were just a few minutes ago with the producers. Then we're going to move back up into where we were with the NCF roll forward. So you can do a couple clicks that way. It moves very quickly back to where you were, and so now you're back to the original analysis that you were looking at. You can even bring it back all the way to the top if you wanted to. And you'll notice that your action pane changes along with resetting you. So within a couple seconds, we're back at the beginning. What we're going to do now is we're actually going to switch over to a report that's almost identical, except that it allows us to compare multiple categories and have a variance analysis that comes along with it. So let's move to that variance report, which is over here. Now I went ahead and kept it one drill down more because it's basically the same thing, where it has one forecast, it has the next forecast, and then off to the right you have the variance that shows what changed forecast over forecast, which is one of the big analyses that we always talk about trying to understand. So you can see your options here. It says category 1, category 2. The same analysis process flows that we had in the other report apply here as well. And so we can use this report to kind of do the same thing, but we can use it to compare what happened last time. So there's that same 100,000. You can see that as a Q2 variance. And if you wanted to, you could drill down and find out what happened with it. The only trick with this is that over here in the variance columns, these do not drill down. Over here to the left is the only part that is part of really BPC that's actually part of the drill down. The variance columns are actually built in after the report is run. So make sure you drill down here. And then we'll be able to do the same thing and see that our number is in June. It's in his block of business, that it was and timing for Michael Kerr, and see the difference. So now let's flip over and take a look at some of the ways that we might use this to analyze other parts of data. So you can see that last time you had timing right here, 85. Last month it was at 14, and you can see the difference was 100,000. So let's take a look at maybe using this variance report to look at maybe a region and move the regional viewpoint down, which is maybe the next block down, where you can say, I want to look at my NCF roll forward, then I want to look at the entity, meaning that I'm going to drill down the entity dimension until I finally tell it that I want to stop drilling down the entity dimension, and then it will move forward from there to line of business to finally producers to finally client. So say I'm looking for instead of using Cincinnati management, we're going to use all of, let's just go ahead and use the same area. So we're gonna select on entity. We're gonna get the drop down box for the Midwest, and we're gonna pull it in for all of the Midwest. Once that returns our data, we're gonna see if we can find that same 100,000 as we drill down to see the timing bucket. I don't know if there's offsets here, but we'll find out. So we have our results back. And you can see that we have timing in here of 122. Last time we had a negative 177. So we had a huge timing change in the Midwest. So we're going to try and figure out what caused that timing bucket to change on us. So now that we know it's in June, and we know it's our timing is what was one of the main factors of our change from forecast to forecast, I can double click, and that will change the action pane to drill down on timing. Now what's going to happen is we've chosen for it to go from timing to entity. So now what it's going to do is bring back the dependence of the Midwest, which is the offices that are the opcos that are underneath that. And then from there we can select and see. So you can look through here and see that you had 85 in Cincinnati. You can see that you had 36 in Chicago. And that makes up what our timing bucket is. And then over here you can see your variance, that it changed pretty drastically in Chicago. We've already explored what makes up the 100,000, but if we hadn't done that, we could drill down and do the same thing. But why don't we go ahead and look at Chicago's then, so we can have the full explanation. And so we're going to look at Chicago, and now what's going to happen is it's going to drill down from the Chicago. It will take us down to the next level of entities, which we don't want it to do, which right here it says continue down entity if applicable. So we want to say no, we don't want to drill down anymore on the entity dimension. We actually wanted to move it from the entity to the line of business dimension, because we want to know what line of business is causing the 200,000 swing in our timing. So if I double click here, it's going to be able to move us down one more level, which is going to take us to the line of business for Chicago. And once that's returned, we can see that the vast majority of it seems to be in commercial lines. I'm assuming since they have transportation there, I don't know, I'm just taking a guess that it might have to do something with that. But then if we wanted to, we could drill down even further and say from line of business, double click, and it will take us to our producers. And then you can see that the big amount of timing is Ralph Wilson's. Okay, well, what makes up Ralph Wilson's? We can do this double clicking again and bring back our client list. And now that the client list is back, we can see that the client in question was the city of Chicago. We now have the answers that we were looking to get. So what we've seen is the ability to be able to drill down across dimensions, be able to follow the standard paths, to be able to analyze, to answer questions about what's driving either our variances or what makes up our numbers. We're able to actually look and see what makes up each of these items, moving from the highest level NCF roll forward all the way to the most granular level of detail around the clients. So I hope that y'all have enjoyed this presentation. I hope that y'all get to use these reports and they're able to help you in doing your job. All right, have a great day.